Hey everyone, today we're going to be talking about market structure. This is a really important concept because if you trade against the market, then you will never become profitable. To become profitable, you will need to see what the market is doing and trade with it, not against it. Now, as we all know, market moves in two forms, bullish and bearish. In a bullish market structure, we can see price forming higher highs, higher lows, higher highs, higher lows, higher highs. This is a bullish market. Now, for a market structure shift to happen, we will need the market to reverse and close below this previous higher low. And this higher low should be valid. Now, how do we know if it's valid or not? It's really easy to spot it. For a higher low to be valid, we will need to close above this previous higher high. If we don't close or we just give a wick, that is not a valid higher low. In order for it to be a valid higher low, we will need it to go ahead and close above this previous higher high. That makes it a valid higher low. People oftenly mistake this as a market structure shift, but this is not a market structure shift because this is not a valid higher low. In order for this to be a valid higher low, we will need to go ahead and close above this previous higher high. But we didn't. We didn't close above this previous higher high. Let's say we just gave a wick. This would not be a market structure shift. But then if this was the case, like it closed above this previous higher high, then this would be a market structure shift. Now let's look at bearish market structure. In a bearish market structure, market forms lower lows, lower highs, lower lows, lower highs, lower lows. This is a bearish market structure. Now, again, in order for this to be a valid lower high, we will need to go ahead and close below this previous lower low. If we don't close before this previous lower low, then this is not a valid lower high. If market reverses and closes above this previous lower high, then this is a market structure shift. But if the market didn't go lower and close below this previous lower low, then this wouldn't be a market structure shift. Now let's look at a real example on the charts. As you can clearly see right here, we are bullish on Euro USD. Now over here, in this example, you can see market forming this as a higher low. But is this a higher low? And was this a market structure shift? Because we closed below this previous higher low. But we did close below this previous higher low, but this is not a valid higher low. Why? Because we didn't go ahead and close above this previous higher high. If we would have closed above this previous higher high, then this would be a market structure shift. And this was a fake out, as you can see. We did not move bearish, we moved bullish. That's how market traps beginner traders. Now, over here you can see a clear market structure shift. Why? Because here we can see higher high and then a higher low, and then we close above this previous higher high. So this is a valid higher low, right? And then we went back and closed below this previous higher low, which was valid. So now this is a market structure shift, and as you can see, market headed bearish. So this is basic market structure. If you don't trade with the markets, you will always end up losing money. Trade with the markets, not against it. If you got any knowledge from this video, please like, subscribe, and share this video with your friends, and I'll see you in the next one. Bye.